Hey guys, welcome back to another video, and today I'm here to present a stock that I think is very attractively valued. I think everyone should own this stock, and it's presenting a generational buying opportunity, and there are going to be millionaires made off of buying this stock right now. So if you guys do enjoy this video, be sure to like, also subscribe to the channel. I'd really appreciate it. We're getting up there. I'd want to hit 100 subscribers pretty soon here. I appreciate you guys for all the support, and yeah, let's get right into it. So the stock we're talking about today is Google. Google stock has been very beaten down recently. We can check the 5-year chart right here, and we can see that Google, they were above the $200 mark, around the 210 mark, and now they're all the way down at the 160 mark, and not even that. But you can see over the past 5 years, this has been a great company. This is one that you want to own. I mean, up 163% in the past 5 years. S&P hasn't done that. So definitely a great company. I mean, there's no doubt about that, but we can see that right now is a very good time to get in. Companies like this in the Mag 7, they're ones that, it's every time it dips, you want to buy it. It's pretty easy money if you buy on a dip in a Mag 7 company stock. We can see that their market cap is very large at 1.93 trillion. The revenue 350 billion, amazing. Net income over 100 billion. This company's making over 100 billion dollars, and their forward PE and PE are very low. Okay, this is kind of a buying point for me. There definitely is more factors that go into buying the stock, which I'll get into next. But yeah, I mean the PE being this low, I do believe that it will rise again eventually, and that this is just a sign of it being very undervalued. There are other signs, but yeah. So the main reason that I think Google stock is kind of on the up and up, and one that you want to own is Waymo. So Google has a lot of facets of, income and how they make their money and, their streams of income, but Waymo is very up and coming, and it is in every major, almost every major city in the US. I mean, the way that they're expanding, I don't see, I see this going very well. Waymo is a very great company. They're they're anonymous driving cars, anonymous self-driving cars. I mean, they don't have to pay any employees. They just have the cars. And I took a screenshot of this. I was reading an article actually, and Google stock Waymo expands. Meanwhile, Waymo on December 5th announced that the company plans to expand its autonomous vehicle rideshare service to Miami in 2026. So they are trying to get into every major U.S. city. Right now they're currently operating in Phoenix, San Francisco, and Los Angeles, and that's it. And this company's doing numbers with Waymo. I mean, just they have 3 major cities in the U.S. I'm not sure how many major cities there are, but there's at least 50, 100. So, and they're only in three, and they're putting up numbers. So I think that the outcome is definitely very good, and they already have services planned for Austin, Texas, and Atlanta. And in Miami, Waymo will complete or will compete with Uber Technologies and other rideshare services. In Austin and Atlanta, Waymo is partnering with Uber, which is another very good thing that I talked about in my last video. Uber and Waymo partnering, I think that's a very good thing for Google. And Waymo disclosed that it has reached 150,000 trips per week, rapid growth from August levels at 100,000 per week. So they're expanding very quick, and it's widely viewed as the leader in autonomous vehicles, which nobody connects Waymo and Google, but if I mean, I've told a lot of people that Google owns Waymo, and they don't even know that. In October, Waymo closed a 5.6 billion funding round, including Google and previous investors. If Wall Street analysts start including Waymo in Alphabet's valuation, it would be a big development. Meanwhile, Alphabet's isomorphic lab raises 600 million from investors. This is kind of something else, but Waymo looks to be very good, and I linked this article right here that we can kind of check out. So Waymo is worth 5 trillion for Alphabet stock. That is a hefty valuation. If I do if I do say so myself, that's almost triple what Google is right now, because you can see it's positioned to grow its valuation by well over 3x from the already huge 2 trillion figure now, potentially becoming the world's most valuable company by a huge margin. As it's often overlooked, Waymo autonomous driving business quietly revolutionizes the transportation sector. This would take the stock over $500 per share. So that's a big statement. I mean, this is by a trusted. I mean, I read this a lot. It's by Trefis, and it's on the Nasdaq site. I think that this is definitely optimistic, but do I think it's impossible? No, I think that this is very realistic. This can happen. And we can see just right here again, Waymo is just growing their rides an insane amount. And the growth is compelling and the addressable market is massive. That's so true. Miami, I mean, they're kind of targeting those cities where there's a lot going on. I think Miami is an amazing spot to put Waymos. I mean, the nightlife, the party scene, everyone wants a Waymo. They want to get an Uber. But the thing about Waymo is that it's cheaper than Uber because they don't have to pay someone to drive. So why not get the cheaper option? I mean, there's no reason not to, and they're fast, they're reliable. There's a lot of things that Waymo has that Uber also doesn't. So in a sense, them working together is great, but also them competing is also great. And Waymo has so many opportunities to expand too. I mean, yeah, food service, just so many. And they're already delivering a lot of rides. We already talked about that. And then their early data backs this up. And then Waymo is already retaining riders at a higher rate compared to other ride hailing services like Uber or Lyft. So that's actually really true because people, I mean, at least in my own experience, if I want to take an Uber, I'm going to check the Uber app, I'm going to check the Uber price, and then I'm going to check the Lyft app and check the Lyft price. And sometimes it's cheaper, sometimes it's more expensive, but usually I'm going to go with the cheaper option between Lyft and Uber. And Waymo's cheaper than both of those. And they're cheaper than that, and their margins are also higher because they don't have to pay a driver to drive you. They also don't have to rely on anyone. There's not really any fault for error because of their self-driving skills, and nobody's in the car. There's no human error that can happen. So I mean, I really like their business model. And then investors will soon recognize the 300 billion revenue figure for the current ride-hailing market has substantial growth potential. It could easily expand by 2 to 3x. I totally agree with that too. And a $1 trillion market for autonomous rides isn't out of the question. It's definitely true. And yeah, we can see returns for Google stock were very bipolar. The 65% up, down 39%, up 59%. And then in contrast to Trefis high quality portfolio, I mean, that's kind of talking about their own thing, but I mean, yeah, I like their viewpoint on the Waymo driving, and margins of 50% are unrealistic. If you have a 50% margin, you have an insane competitive advantage to your peers. I mean, you want to aim for 30-40% margins, profit margin, to have that competitive advantage and have competitive pricing in your market. But if they're in that 50%, we're talking almost monopoly range of competitive advantage, which Google was taking a trial for. I think they beat the case, but yeah, that was interesting. And if Waymo can capture about 1/3 of the $1 trillion autonomous rides market, it could generate annual revenues of around 300 billion with a 50% margin, and that's 150 billion in profits. That is a very realistic expectation, I think. And for what it's worth, at a 30 times earnings multiple, that would imply an additional valuation of about 4.5 trillion for Alphabet, considering that Alphabet is worth roughly 2 trillion presently and could take the company's market cap to over 6.5 trillion or over $500 per share. So I totally agree with this. I think that this is very true, and I think that Google also has other facets of their business that are expanding very fast as well, just like their AI. I mean, I love their AI search feature. That's very good. Their advertising agency. There's a lot of things with Google that are going on behind the scenes, but Waymo is just one that's kind of out there that I think has insane potential for growth. And to be sure, building this sort of scale can take a good deal of time. It's very true, quite different from signing up for, say, a Google or Netflix account. However, investors will need to look well out into the future. Think 2030, not 2025, maybe even more. So I totally agree with this too. Google is, I mean, when you are investing, you have to invest for the long term. I mean, at least when you're investing with my principles and my strategies, I'm investing for the long term, at least 3 to 7 years. At least 3 to 7 years. I'm not wanting to buy a stock for 1 year and then, I want a stock to stay down the first 1 or 2 years so I can build my position a little bit more and get some more cash in it. And then I hope it explodes after that. I always want a dollar cost average down. I'll dollar cost average up if my prediction's right. There's a lot of things that you can do. So I really like that Waymo article right there. And then let's look at, the PE ratio. This is another thing that just shows Google's undervalued presence in the market. A lot of stocks are undervalued, especially in the Mag 7 space. But I think Google is the most undervalued in the Mag 7 space. So I think that one's going to be very good. So yeah, an alarm going off right there, but yeah, I think that Google is definitely going to be a very good stock to invest in right now, considering its PE ratio. In the Mag 7 space, I think it has the lowest PE ratio. Correct me if I'm wrong, but it's 32% less than the historical average. So the stock is pretty undervalued. I mean, we can see that today it's 19.33 and the average is 28.4. That's a lot less. That's 33% less. And that's a lot when it comes to PE ratios. And we can see the median is 26, so that's also a lot higher. And the minimum is 18.83, which they're almost about at, and the maximum is 57.88. So I think that Waymo prediction of the PE ratio being a 30 times multiple and them gaining that additional revenue, I think that's honestly lower than what Google's actually going to be worth 10 years from now. I think that it'll more than that. So I'm very confident investing my money in Google with its sectors of growth. And we can see right here that Google is a great company. This is what I look for, is companies that are undervalued that shouldn't be undervalued. Because well, for a company to be undervalued, they have to have, a better valuation than their stock price, obviously. But I mean, there are companies that are just very cheap because they're bad companies. They should be very cheap. But we can see right here that, I mean, Google is growing their revenues year over year. Great growth from this company. You can see they're growing them in the, high single digits or low double digit range. Usually they had a 41% growth after 2020. That was a rough year. But I mean, on average, it's around 20% a year. I'd say 15% a year growth year over year. And also their gross profit is increasing very nicely. We can see that too, which I really like to see in a company like this that has the advertising agency and has this competitive advantage over all their peers. Their gross profit increasing is a very good thing. I'm very glad that I'm seeing that from this company. And yeah, I mean, we could go deeper into the financials, but this is kind of just the surface level. Their money is going up. The stock is probably, going to go up too. And yeah, I mean, I really like the Waymo aspect of Google. That's definitely my favorite part, but I do see a lot of facets for growth in this company with their AI models, with their search engine, obviously, and then their advertising agency. There's a lot of things that this company can do, a lot of partnerships they can have over the next few years, and I think that they're severely undervalued in this market, and I'd highly suggest you buying Google right now. I think it's a great opportunity. So yeah, thank you guys for watching this video. I hope you enjoy the video. I hope you gain some value out of it and you can go buy, at least, buy half a share of Google stock. Buy a little bit. Buy as much as you can of Google stock. I think that this is one that's going to go up a lot over the next, 5, 10, 15, 20 years. This is one that you want to hold and you shouldn't have any worry in holding. I think it'll outperform pretty easily. And yeah, if you did enjoy this video, be sure to like it. I'd really appreciate that. I appreciate all the support. Also, subscribe to the channel if you want to keep seeing more of this content. And I'll catch you guys in the next one. Peace.